Welcome to the Stock Market Playbook. I am your host, Jared Johnson. Today we have Anne-Marie Baiynd, and she has some very interesting takes on the market as both a futures trader and an option trader. With a background in recruiting and neuroscience, she brings some very interesting points of view to how she approaches risk and the stock market and what her current favorite trade is. Stay tuned and enjoy. Okay, we're here today with Anne-Marie Baiynd, and very happy to have you with us. Thanks for joining us. It's really nice of you to take some time and jump on the podcast.
I'm excited to be here. Excited to spend some time with somebody else that knows charts intimately. It's my happy space. Traders only know how other traders feel. You can't be a trader or an investor and not talk to somebody and there's just a disconnect. They don't quite get it. So it's always great to spend
It
time
it
with a fellow mind.
it very much is. It's kind of, I actually, and this is a random example, but I heard I had a friend that ran or not ran, managed whatever, one of the crime labs, right? For the police department. And
Wow.
he said, the only way I can get through the stress of what I see is talking to other people that work in labs or cops because it just helps me process. And I think traders were like this. The market is a
Yes.
wild adventure and you have to talk to other traders to kind of process all the things that we see and
True
hear.
enough. Very true. Very true.
So it's always good to chat with traders. As an experienced trader yourself, I think you've probably experienced this. Um, I would say on a regular basis, people that ask what I do, they either know trading and we can talk about it, or they want to hear about it and they get real glossy eyed in 10 seconds. Like,
Yeah.
oh, that sounds interesting, and so it's always good to get traders together and chat about it. um I am pretty anxious to hear your experience. So first of all, give us a little bit on your background. How did you get to where you are? What's some of your past experiences in trading?
So about 25 years ago, I was really looking for change. I owned a recruiting company and I was just really burned out. I, you spend a lot of a lot of time with people and sometimes you go, oh my gosh, how do people even make decisions that they make? So I got pretty burned out. I'd been doing that for about 15 years. And so I said, you know what? It's time to roll this up. I sold it to a partner in the business, and I had a nice pocket of cash. And I said, I want to do something different. And so, as luck would have it, looked at trading and I thought, how hard could that be? I mean, come on. So I jumped right in, had no idea what I was doing, and commenced to lose a very, very large portion of my portfolio simply because I did not understand what I was doing.
Oh,
I literally,
the true right of entry of every trader. You have to have
uh,
some painful
oh,
losses.
listen, it was bad. And it took me, finally to be, most transparent. I wasn't sharing the losses with my husband. And so as soon as he figured that out, he was like, I don't think you know what you're doing. And so that's going to stop until you figure it out. And so um, I stopped and just kept after it. Took maybe 3.5 years before I got over the complete depletion of emotional capital,
Yeah.
that your sense of self confidence and what you're thinking about goes out the window.
Yeah.
Um, and so it's a hard climb, but you stick with it because it's work that you love. And from my background, it's the perfect mesh. So I started as um, my master's degree is in applied statistics. And so I
Very
was a neuroscience researcher, but I got tired of eating ramen noodles. And so I, yeah, um, can't make a lot of money doing that stuff. And so when I stepped out to recruit people like myself. And so that led me into the recruiting field. And so the big important thing in that step was that when I finally came to trading, I got the math and I got the people all together, the behavioral elements,
yeah.
the physicality of brain chemistry, and then how to build mathematical models. So I felt like I had arrived. I thought, who in the world doesn't have, nobody has more skills than me. Literally, I was the smartest person in the room. All you had to do was ask me. And so, what the market finally did was, kick me in the head with a boot a couple of times.
It's brutal
Enough,
like that.
yeah, enough for me to go, hey, listen, it's not what you think. It's what the market says. The market's always right. And you can't expect black and white no matter how hard you study. And this measure of uncertainty is really the thing that we all deal with. It's sort of like if you went to your favorite chair and you normally throw yourself into it, like you hop, but 3 or 4 out of 10 times it crashed to the floor and you broke an arm when you sat in it.
It's a great example.
Right? And so this level of uncertainty, we always have to approach with, okay, what's my risk? Maybe I ease myself into the chair so the chair doesn't actually fall on me if it happens to break. And this risk event is really what I had to learn. It's the thing that someone like you, that's a senior money manager, knows at the outset, but a retail trader has to learn over time. And that was probably the hardest thing, learning to come to the space where, listen, it's okay if you're wrong because you
Yeah.
can't be right all the time. But when you're wrong, lose a little enough so that you can come back and trade the next day without emotional or physical damage per se.
Yeah.
And
That's
25 years later, here I am.
here here you are. Now, when you took a step back and said, "Okay, there's some things I'm not doing right because of my past account balance and current account balance." Did you have somebody, did you find a group, or was there something that
You
helped you
know,
through that, or did you just say, "I'm gonna dig in and take my statistical background and neuroscience and recruiting background, and I'm gonna make some sense of all this craziness?"
actually, yes, primarily because, if I do have to say this as a side note. If I can learn to trade well, there's hope for everybody because of the simple fact that initially I was generally unteachable. Uh, you bump into those people, you're like, you're hopeless. And so I know I can look at those people and go, "Oh yeah, that was me." But I had to say, "Okay, strip it all away. What do you know?" And what I used to think, which was as an early trader, I thought more was better. More indicators,
Sure.
more so when they all match, everything's great, except we all know that they don't all match. Routinely, they don't all match. So you have to take the best of, and I stripped everything away and I started looking at price. And then, God bless him, he's such a lovely person. Brian Shannon, I met him at a, where did I meet Brian Shannon? I can't remember where, somewhere in some sort of place, um, some tech thing with other traders, because he and I have known each other 20 years. So
Yep.
I can't remember that far back. So I can't remember that far back. Wow. Yeah, she actually said that. She did say that. Um, when I met when I met Brian Shannon, he said, "Hey, you need to look at the VWAP." And so the
Okay.
VWAP has remained a relative anchor for me. But what I had to tell myself, those spaces of, hey, you got to fix yourself was one, you're not always going to be right. Two, you better manage your risk or you won't get to trade.
Yeah.
And then three, you got to do it consistently. And that
Boy,
really is a lifelong battle.
those are wise words, and you're right. You know, survivability in this market is
It is.
game number one. And you know, it's interesting on the institutional level. Um, I you know on the retail level, everybody wants to know how much you can make, right? Can you make a lot of money? How much can you make, right? This is what,
Right.
you know, most retail traders that I speak with, this is what they want to know. It's interesting. They want to know how much they can make with how little money. You know, what
Yes.
can I do with, I
Yeah.
don't know, $5,000, right? People come to me a lot and
Yeah.
they say, I'm going to give you $25,000. Show me what you can do with it. And I always say, well, nothing. I can do nothing with that because in an institutional space kind of doesn't work. And so, but it's interesting the flip from, and I'm not saying people need to work with the institutions, but it helps to change your thinking to an institutional thinking a little bit,
Yes.
right? Instead of how much can I make with how little money, the institutions are much more concerned with how little risk can you take
Exactly.
and how much money can you do it with, right? Like,
Yes.
what is your maximum amount and what is the minimum amount of risk we can take with that? And then if there's some upside, awesome, you know? And
Yeah.
so I think that's a shift that because we all start, you know, and I in 25 years ago when I started trading, I thought, okay, can I really just kill it with 500 bucks, you know,
Uh-huh.
and
Uh-huh.
make this thing crank, you know,
Yeah.
and it's very interesting over time how it shifts from, okay, how do we take the least amount of risk and make the biggest return
Exactly.
on the biggest amount of money? And so
Yes.
it's an interesting shift. So tell me what markets are you where's
Sweet
home
spot.
base? Where's your
Yeah.
wheelhouse?
So, um, I love the futures markets. I
A
do.
futures
I
trader. We don't have a
love
lot of futures
futures.
traders, and
Love
that's a
it.
good.
Yeah,
So
absolutely love.
what's your favorite in the futures markets? Are you trading?
So I like the ES because it's liquid, but I will
Okay.
trade the NQ if I get up and I've been replaced by an alien, which happens on occasion. The day happens, I get up and I go, I'm trading the NQ. I trade oil, I trade gold. And those are my favorites. But
Right.
I do a morning report, and so I will go through the ES, the NQ, micro Bitcoin because it's become a measure of liquidity. You get to
Yeah.
see if it's risk on or risk off in the current environment of Bitcoin. And so I like to follow that, and I'll do oil and gold. And those things I look at every day because I'm interested in general to see, all right, what does volatility look like today? How is the dollar responding to X, Y, or Z? All those sorts of things that you can look at and glean from what you're looking at in the markets. So
Yeah.
I do. I love the futures, and I spend a lot of time in options. I'm a serial option seller, so
Mm. Wow, you like
I like
premium.
I like selling options a lot.
Excellent. So, two great things to dive into. So, first of all, when you look at the futures market at
Mhm,
whatever time you do,
mhm,
morning, night, whenever you look at the futures
yes.
market,
Mhm.
what is your what's your how do you how
How do I
what jumps out
digest
to
it?
you?
Yeah.
Yes.
So
What is your what's your go-to on kind of the score of the
yeah,
market? It's risk on, it's risk off. Where do you go to on that?
yeah. So my basic concept is because the market is created to facilitate trade. That's the nature of a market. It's there so I can sell you my oranges and you can sell me your bananas. So we've got those places. I look for places that traders begin to buy inventory, and they'll say, "Hey, I'm only going to pay X for this." And so you'll see it show up as a sideways pocket. We would normally call it consolidation.
Hmm.
And so in consolidation, there's a place where the buyer agrees that it's within range to buy, and the seller agrees they're within range to sell. And so there's basically a high and a low. It's trapped in a little range. And so when it breaks that range, it means that a measure of distribution is occurring. So it either will distribute at a profit or distribute at a discount. We normally call this liquidation to the downside, um, or, distribution to the upside. But for me, it's all about I just either bought all this stuff that I want to sell at a better price, or
Hmm.
I've sold all this stuff that I want to buy back at a cheaper price. And so, in order to see that big picture, I always start with the daily chart, even though I'm an intraday trader. So, I'll see, all right, what are we doing? Well, as you know, our broad markets have been in this awful choppy sideways range.
Yeah.
And so my thought is, okay, big picture, I'm in the middle of a choppy range. Let me come in and see what the day's doing. I will look at the first 30 minutes of the Globex, the high and low, and I will measure it to see what the traders do, how they respond to it. So I love that 6 to 6:30 Eastern time.
Hmm.
I look at the midnight candle, when
Hmm.
Asia's sort of winding down. I look at the 4 a.m. candle when Europe is sort of winding up. And those levels essentially tell me, hey, I'm holding my pre market action, or I'm not meeting my Globex action. So if I continually fade, I go, all right, well, Asia is selling and then Europe is selling, and I guess we're going to sell into yesterday's level or whatever. So everything, I used to have a chart full of all kinds of indicators. Now it's just price and time and maybe an indicator that gives me a little bit of a momentum event,
Yeah.
but I literally have two things on my screen. It's just price and time, and I'm staring at those candlestick times that I know that traders tend to execute on. So, for instance, the initial balance high low. If I'm not sharp, if I get up in the morning and I feel like, my head's stuffed with cotton wool from, having allergies or whatever, I will say, you know what, I'm not trading that first hour because I'm not sure I can respond mentally to the speed that I might see at a personal liquidation event, right? So for me, it's all about, hey, what are the traders trying to do here? Where are we setting up? And then, of course, you look at 2:30 and then into the last hour of the day, which I don't trade a lot on that last hour simply because, market on close can be.
It's a little erratic for sure.
Yes, there's the word, yes,
Li-
erratic.
little erratic. So during the day, so it sounds like you're quite short term. You're intraday on
Yes, uh-huh.
everything. Are you in and out 5 times, 20 times, 2 times?
4 or
What
5
what
times. Yeah,
Okay.
4 or 5 times a day. It'll be relative to I'll choose a reflexive event. So let's say I see an exhaustion event and it's prior support from a prior day. I'll say, "All right, let's see if we can hold that level." So I will buy it. And I really, if you wanna boil it all down, most of the time I'm a range trader. I'll go to the edge of that range, and then I'll get out at the top of the range. And so, yes, we trend a few times in overall motions, but in general, we sit in a sideways pocket and slosh around
Yep.
until we decide we want to move to the next space. So I found my success in the slosh.
In the slot. You know what? Sometimes you gotta go where the action is, even if
Uh,
there's not a crowd. I
Yeah,
always say
yeah.
it's so risky going to a restaurant that you've never been to that doesn't have a line. But sometimes you gotta go to that
You
restaurant
know
because
what? That's exactly what my husband says. The same thing. I'm like, let's do it. Nobody's here. It's all ours. He's like, I think this
but
is
why is
sketch.
nobody here, right?
Yes,
Is it terrible?
exactly.
But and man, the stock market is so that, right? If nobody's there, is
Exactly.
it because it's a terrible place to be or because I mean,
Yeah,
it just goes to show, as
that's
I hear
so
you
true.
talking about, day trading the futures markets, that was early in my career when I had my youth about me.
Oh,
And 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 it was fun and it was wild. And there were days where I thought I could have just stayed in bed all day and I would be further
exactly.
ahead than I am right now, right? And
Yeah,
it just goes to show, you have and I don't mean to bunch up your strategy in too simple of terms, but you're looking at
I love
levels. You're
simple.
looking at
Exactly.
highs and you're looking at opens and
Yes.
closes of the various
Highs and
Asia,
lows. That's it.
Europe, and
Yep.
and that's and that's a great way. I've had a lot of great experience in that kind of trading. But it also goes to show that everybody has to find the market and the approach that works for them. You know, I
Exactly.
I can't day trade anymore for various reasons, but probably partially my attention span maybe. But it's there's a lot of money to be made in that. And so
Yeah.
so this is your go-to. You love the short term, you're in and out every day. You're
Yeah.
not waking up. Do you hold anything overnight? Are you
Not
waking up
futures,
early?
but I will do options. I will do options. That's where
So so
my
so
swing and longer term things go.
so what is a typical option trade for you?
So I love covered calls and I love selling short puts. And so what I do, this is my day stuff, how I'm going to eat, my future stuff. And my longer term portfolio has more time events sit on it. So I
Mhm.
I do a lot of research. I maybe try to find 20 stocks that I rotate in and out of, or 20 stocks I would want to own. And when prices move in certain directions, I will sell a put or I will buy the stock and put a covered call on it. And that's really that's a very simple event for how I run that part of my portfolio.
So if you're selling a put
Mhm.
or and you're okay taking the shares, right?
Yes.
Get a
I
nice little
have to
discount.
be okay taking the shares to even sell the put.
Yeah.
That's the first question I say to myself. All right, Sally, you're going to take these if they come, and do you feel that that is the right price? And so
So
definitely.
so when you sell a put, what is
Mhm.
your ideal setup? Are you saying, okay, here's a, if we're back at price and maybe technical analysis side of things,
Uh-huh.
are you saying here's a are you selling puts into momentum or are you selling puts into support and hoping for a reversal and a bounce or what's a setup that you like to see?
Great question. So my ideal short put is sold at support because ultimately what I'd like to do is uh, collect a big wallop of the put up front. And then um, when I have that cushion in the stock name itself, I can sell a put that is a little bit closer to price. But my goal is try to sell the put when the volatility is the highest and when the actual price of the option is the highest. And so I'll run a couple of scans that tell me that, and then, I'll take it. I actually wanted to be put to GE Vernova. So I gave it a few months because I want to collect premium that's meaningful. But I gave it a few months and sold the put at like 345, and I thought to myself, I'm surely gonna get this. No. So for those of us that know how much G Vernova is right now, not so much. I didn't get it. So look, just, my thought is that easily in this kind of market where so much is very overpriced,
Yeah.
time is my favorite thing. I love the fact that options give me time to be right. I can be very patient as long as I understand the price flow. And
Yes.
that's where I'm really good. And that comes from the main reason I went into statistics in the first place is because I love searching for patterns. I love seeing patterns. They're my favorite thing to do.
So what do you do? You sell a put. I mean, is your time frame maybe 3 to 6 months? Is that an
Yes.
expiration
Yeah.
you
Mhm.
like?
Yeah.
So let's say you sell a put on whatever stock. Let's say
Mhm.
you're saying, you know what, Coinbase
Yeah. Mhm.
is in great shape. And
Yeah.
you sell a put on Coinbase, maybe you have a 3, 4 month expiration.
Mhm.
And maybe you collect $25 on that option. And maybe the stock
Mhm.
drops $100, right? As
Mhm.
we what
Yes,
what
yes,
what
yes.
is your go-to on that? I mean, obviously you're in a position where you're gonna take the stock and it's
Mhm.
gonna and just by the way, I'm a big option seller myself, so I'm on
Mhm.
your side 100% on this.
Yeah.
So what is your go-to on that? A stock just didn't perform how you thought. Some unexpected catalyst really crashed the stock 3 or 4 times the premium that you collected on that short put.
So, a couple of things. If I think it's going to recover, um, and I'm still far away from expiration,
Mhm, mhm.
I will kick the can down the street. I'll say, let's give it another 3 months. And because I always measure for implied vol, I know I'm going to get premium, whether it's $2 or 50 cents. I'm kicking the can down the street. If it comes to that next space and it's still doing badly, um, I don't, I don't want for this to sound bad, but that it's, I've been fortunate not to have that happen. And
Good.
so what, but there's still probably 25 more years being in the market. So let's just see how
For
it
sure, for sure.
goes.
No, that's
So
that's great,
if
that's
it
great. I
if
I
it
think
does,
there's
I'm extremely selective. And what I'll notice is if it starts getting close to if it stops performing, I will either butterfly it by
Mhm.
for folks who might not get that, I will buy an option above it and buy an option below it. So it begins to limit my loss and I'll compress it. So I'm all about triage. And what I like to do is set alerts that go, wait a second, it's not supposed to do that if I'm right. So I'm going to give it 3 days. And if it doesn't, I'm going to butterfly it. And then that way, if it ends up having some kind of massive earnings drop across the way or whatever, then, it is what it is. For
Yeah,
me, I'm usually willing to take the stock. So even if I get it at a 20% discount, which is what I'll normally sell my option out. I'll sell it for 20 to 50% of a discount. I'll get the credit. If it comes into me, I will sell and at the money call far
Mm,
away so I won't get so the stock won't get called away. And I will continually roll it forward until I've got a cushion where, okay, if this gets called away, I don't care. So
yeah,
I'm very good at pulling the levers. One, I don't have a gigantic number of stocks to watch.
yeah,
I make the number very small and I'm just constantly watching its behavior and saying to myself, all right, I think we know what's going on here. It doesn't mean I'm perfect, of course, but what I am very good at doing is managing that risk event because I will never forget how bad it hurts to live in a space where I have not managed risk properly. Those are scars that, um, I'm healed, but you can still, I mean, they're there, right?
yeah.
For
And
me, I traded on the Thinkorswim platform, and I still do. 25 years later, I would get the Pavlov syndrome of every time it went ding, I would get a feeling in my stomach like, oh, this is going to be bad. And so, literally, after I started fixing things, I had to turn that alert off so I could not hear
yeah,
when an
absolutely.
order went through so that I could take that to extinction. It was, yeah. So,
It is wild. I've been there, and that's a wild thing to experience. And I think, it's interesting. Obviously, I love options myself, and so I have a biased opinion to death. But interestingly, we've had a lot of people on the podcast that are really big and love prediction markets, right? And in the prediction
yes,
market, there's so much good information that can come from prediction markets, but
uh-huh.
the end of the day, I just in all the years I've been trading, I've gotten less and less interested in prediction of anything, right?
Yes,
I just it, it's
yes,
it, it's sad. It's like my crystal ball has been set aside, and I was like, I don't know if it ever worked. Like it's markets are going to do what they're going to do, and managing risk is what we can have control of. But I think options are such a crucial tool to any trader's arsenal to manage that risk, right? As you said, you have some time on your side, and option premiums can be so helpful. And I just have, in my own investing style, gotten to the place where I've said, if I don't have a lot of extra tools, I don't want to do it. I don't like
yeah,
directional anything anymore, and because I
yes,
think that
yes,
there's so much that helps with the option side of things. I had a trade
yeah,
the other day that this was on my fund and so on, and I've been really eyeballing the material stocks, steel and aluminum, and obviously
yes.
money is coming out of
Mhm.
software and it's going into some of these other sectors. And I looked at this trade and I thought, okay, I'm out of this through a covered call and through some other option strategies. I'm out of this. And it was just funny. I sat and I looked at this and I said, I sat in this stock for about 6 weeks, and I entered exactly. I kind of went back and traced it to the penny. And I said, I entered exactly where I exited, give or take like 10 cents on the share price.
Uh-huh.
And was able to get out with $10 a share, right, of profit. And that's just the power of options. The stock went absolutely
Yes,
nowhere for 6 weeks, and
yes,
I gained all this money on nothing
uh-huh,
happening. And I
yes.
think the option side of it is so great with that. So that's interesting to
Well,
hear. Selling
yeah,
selling that premium's a really
yeah, it
good
is. Well, think of all the cushion that it gives you.
yeah,
In buying a stock, it's essentially a binary event. Either it is or it isn't, which
yeah,
is another reason I don't like those prediction markets, right? Because they're binary. It's
yeah,
yes or no. Well, the whole world is, well, what if? And that whole space of gray is really what makes options fantastic.
For
I
sure.
try to, a lot of people go, oh, I'm just going to buy leaps and this is going to be great. And I'm thinking to myself, listen, I admire the fact that you think it's going to go to the moon. I sure hope it does. But how about selling something against that so that you're not forking out all the cash right up front?
For
Just
sure.
learn to use other people's money. And that
Yeah.
is something that I think sometimes people think there's something wrong with that. And that's what every person that has means has done that. They will
Yeah.
use resources that are available to them. And, I it's hard to get people on the train, as it were. Takes years.
For sure, for sure. And I think, there's enough complexities in some of these other strategies that it keeps a lot of people out, but
Yeah,
but
it's
it's
scary.
it's a
Yeah,
it's a great space to be. What
yeah.
what's your favorite next trade? What are you eyeballing the most right now? What do you like the most?
Um, I have to tell you, uh, I'm a huge fan of energy. Um, of course, a lot of us we're seeing the writing on the wall, and I I think this newest, I'm going to call it a skirmish because this is what I'm praying that it actually is. This newest geopolitical event, is giving alternative energies a little bit of a pop. And at the rate that we're going, we've had so much needed capex investment in oil and gas that we simply have not had for a decade. We're facing, if you look at any of the reports that people that really know oil are saying, they are saying, listen, there's a storm coming and you better be aware of it. And as much as I like uranium, which I actually do, I like uranium,
It's a good one.
it's got so many headwinds because of regulatory constraints.
Sure.
Literally, they could put one up in 3 years, but the regulatory situation stretches it to 15. And so
Yeah.
we have to have alternate energy sources. I think the small uranium reactors that some of these companies are working on are going to give us the answer to these data centers. And
Yeah.
somebody's got to step out and say, here's how we can do it. But I don't think that comes until we feel an incredible pain from energy being incredibly expensive. So every
Yeah.
major dip I see in oil, I'm going to find some way to move in to some sector of it. So that's my
Buying
focus,
the
and
dip. Oil.
I think we're in a commodity super cycle, and
Yeah.
so we'll see, especially in the fiat nation that we live in, and monetary constraints as they are or aren't. Yeah, physical assets going to be the way to go.
I think that's a pretty respectable point of view for sure. So that's great. That's awesome. Tell our viewers where they can find more about what you're doing and follow some of your research and your analysis.
Yeah. So you could find me on YouTube. It's Anne-Marie Trades and the trading book. You can also find me on Top Step TV. Top Step TV is a, a prop firm for funded traders. And
Yeah.
then you can also find me on the Benzinga platform. And yeah, Twitter or X, sorry. You can find me on Substack. I what I love to do is share information, so you'll find a lot. I put up my setups every day, tell people exactly how I set up a trade. When I first entered the business, Jared, one of the things that I noticed was everybody kept secrets super close to the vest. It was
Yeah.
sort of like,
Yeah.
"Oh, that's my secret sauce." And you would talk to somebody and ask them questions, and you'd leave going, they know a bunch of stuff, they just don't wanna tell me. And so I thought, if I figure it out, I'm telling everybody what I know, and they can take it, use it, do whatever they want to. And so that's been my motto. I'm extremely
Right.
transparent about every setup, everything I do. I Nothing is any secret sauce. It's just attention to detail, consistency, and risk management. And if you just stick with those, you literally could find anything that you like to trade and build your own little structure around it, as long as you tell yourself, I'm not going to lose more than this much at this time in this way on this trade, and hold yourself to it every single time. You know,
Boy.
you might
Uh,
run out of money after 20 times, but that happens with the undercapitalized. That's the
yes.
reason companies go out of business, and it's the reason that traders leave the business. You were talking about what can you do with 25,000. Back when I was running money, I would have somebody say, "Now, do you think we could make like 10% a month?" I said, "Hang on a second. Do you do you know what 10% a month is for a year? That's 120%. Do you see any big money managers doing that aren't asking for, 50 million bucks and 40% of that,
Yeah.
if they could even do that?" And so the realistic expectations have to be tempered. It's the it's the thing we all hear about the guy. We hear about the guy that went on Reddit and bought 2 Bitcoin at $45, and now, whatever.
Yeah.
But
Yeah.
we always choose those tiny dots and paint the whole barn with them and say, well, I could do XYZ. But I always tell people risk is on a string, and the bead is risk. And if you say here you want reward, if your big reward is coming this way, then you better make your risk just as wide, or that reward's not going to come. Risk and
Yeah.
reward are intrinsically connected. And unless you want to, swing for the fences and have it all be gone tomorrow, that is not an option for you to try and get that kind of percentage. But, people YOLO like that all the time.
I know, I know. If I have no tattoos, but if I were to be tattooed, it would be risk and reward. As a
Yes.
trader, you gotta
Yes.
remember that stuff.
Yeah, absolutely.
Oh,
Thanks
well
for having me, Jared. It was so
that
entertaining.
no, that is great. You shared some very good insights, and I very much appreciate it. And we'll make sure to post all your links below this podcast episode as well, so that people can find you and follow and see a little bit more of what you're doing. Because I think you have a really good point of view on the market. I think it's a very no nonsense, treat it like a business approach. And I think
Exactly.
that's great.
Yeah, it's
That's
important.
very
Thank you
good.
so much. Thank you so
Well,
much.
thank you, Anne-Marie. Thanks for being with us, and let's stay in touch, and we hope to have you on again in the future.
Absolutely. Thank you. Thank you.
Thank
Hope to be
you.
back.
Absolutely.